All right, guys, welcome to the Independent Investor Channel. My name is Ryan. We're going to give it a couple moments. I do apologize. I guess some of the community has been filling me in a little bit on the monetization of these live streams. However, it does help me supplement just stand by a sec. On the monetization of these live. It helps a little bit. I've been kind of on a hiatus a little bit with my upload schedule, which is totally fine. You guys know that if I don't have any particular topic, I've been kind of busy at home with my upload schedule, and that's totally fine. I don't miss these live streams. I very much enjoy doing them. It's something that's very heartfelt for me. I look forward to doing it. I look forward to coming on and fostering the community, and we've got a lot to talk about. We're going to jam pack a bunch of content into 2 hours. So the way I run this live stream is I open it up collaboratively. So you'll see every now and then an invitation drop into the chat here. I also run the chat to the side. So you really do have a sense of community. If you have direct questions for me, please drop them into the chat to the right. I will see those. If you are indeed a channel creator, I always try to give some shout outs as well. I've got a couple shout outs of the week for this week. I always try to do that to give folks some recognition. Okay, so the first shout out of the week is going to go to JMac Investing. JMac Investing had me on for a live stream on Wednesday. I thought it was a really productive conversation. That helps me, and I hope you feel the same way about coming on and talking nothing but stock and finance and investing and what to do with this stimulus check that we're all going to get, what we're supposed to be doing with this stock market, where it's going. Is it going to zero or is it going to go to 100,000? I don't know. We revolve around a lot of these questions within this live stream, and I'm glad to facilitate such an opportunity for you guys. But I think Jason had a cancellation on Wednesday and I was feeling saucy, so I jumped on. I would really encourage you guys, if you're part of the community, man, spend a few moments popping on and helping support those guys. I do everything I can possibly do. I'm just one voice, and I really do the best I can to support everybody in their mission. Case in point, my second shout out of the week has gone to Hidden Freedom Investing. So Dave runs a really good channel, and I've got a few other channels in mind that I want to add to my featured channels list. Jamie and Passive Income Investor Kyle and also Matt Money. I obviously can't jam everybody in there. I'm very, very loyal. So once you get placed in there, I really like to honor that loyalty and keep you there. But unfortunately, for whatever reason, I had one of my featured channels kind of drop off on the YouTube presence. And quite frankly, this needs to be something that we remain stoked up on. And it needs to be something that we're continually revolving around. That's just how I pursue my investing opportunity. It doesn't stray a whole lot away from me. What I mean by that is I live my life outside of the stock market. I've got a family that I'm looking to raise. But my financial picture, my financial health and well-being, my acknowledgement to how important it is to build up wealth and do it the right way is important to me. Again, if you don't believe that, look at my face. For those of you guys that join me every single week, you know how serious I am about this topic. But Hidden Freedom Investing was one that I really just appreciated all of the efforts on all of the different community platforms, that of which I'm unable to duplicate. And I just want to acknowledge that. And by doing so, I did add Hidden Freedom Investing to the featured channels list. He's up there with JMac Investing and Gen X. And I tell you what, guys, everybody in the group deserves to be in that list. I hope it gets you some advertising. I hope people find your message by doing that. I may look to rotate and give everybody a fair shake, because I've got Kyle with Passive Income, who's always been a staunch supporter of my channel, as well as me for him. And then also Matt Money, who I understand did a really good live stream last Saturday. I missed it and I had no idea. So I do acknowledge that that set schedule helps a guy like me for sure. I would have come on and supported that. But I guess Dave and Matt ran a really good live stream, broke the record this week. And I know for Matt, it's no big deal, but I guess it was 2 hours and 37 minutes long. So blew me out of the water with my small 2-hour live stream. But I do apologize for missing that. I guess there was some kind words for the mission that I'm putting down. I'd like to look at the mission a little bit more holistically as opposed to individual messages, because quite frankly, we need to band together during times like this. We really do. There's comments coming through. This is a stock picker's market. That's not true. Okay. Is passive investing dead? No, it's not. If you're not looking at this market through the lens of a self-directed investor, then you need to change your lenses, okay? Because if you don't think that the market, the S&P 500, is more attractive now off 31.5 bits, then you're not looking at the stock market in the correct way. If you're only excited about the market when it's at an all-time high and you want to step in and you want to ask me, hey, is VOO a great product now? You're going to get some hesitation from me. You really are, okay? You're going to get some hesitation, because if you can do the best job that you can in acknowledging that the stock market is either at or bumping against an all-time high, and it was overvalued for quite a while, guys, right? So it's not like it dropped off a cliff immediately during a building phase. It really went into a hyperbolic stage and really started to run valuations through the roof there for the final 3 months of the bull market. So if you paid enough attention, at least to my channel and some of these other channels, we've alluded to that being the case when it was the case. Now, we're going to talk a lot tonight about what it is that you can do. I do have one guest that's in the queue. We'll bring him on as well. If there are any other guests that want to make their way onto the channel, you guys know I keep this an open, collaborative effort. But I did want to finish. I've got Travis Williams in the group here, and also Quest to Fire in the group. Also, another couple channel creators, stock market investing as well. It's made his way into the community. Welcome to you folks. Special shout out to Quest to Fire, who I saw the word overtime in one of the comments that she had put through. Bravo Zulu to you. That's legit. You are a true hero. I mean that from the bottom of my heart. Thank you. On behalf of the Independent Investor Channel, you guys are truly heroes. You really are. And I'm humbled to be part of a lot of good things going on in what seems to be a landscape of really, really poor news. So if you guys want to flatter me this evening, it would be lovely if you could provide me some good news, okay? I'm going to provide you a bunch of good news. If you're a new investor and you've ever been wondering about the prospects of the stock market, it never ceases to amaze me how many people will talk in a perfect world of just investing when the market is at that perfect rock bottom. And then when it reaches a time where the market is recessed a bit here off over 30%, where we are now, it's amazing how if you can't read through the writing a little bit and sift through the clouds and find some reason to buy this stock market, you will not. You will not. This has been one of the toughest downturns. I know some of the channel creators and some of the avid investors in the group would agree with me on this. This has been a tough one, I will acknowledge, okay? I will first and foremost acknowledge that up front. However, I will not apologize for the lessons that will come out of this for each and every individual investor. I will not, okay? The investing landscape is made up of a bunch of different fundamental principles and strategies that you can follow to seek out your exposure. But it's amazing how many people out there do everything that they can do to talk themselves off of what I feel are the quality avenues that they need to be going over. Okay. Now, I'll disclose to you guys what the additions were to the portfolio. We put a touch of money back to work here. We had a pretty good discussion on JMac investing on Wednesday on what direction we think that the stock market is going to go. He kind of gave this idea, and it's not one that I necessarily thought of when he said it, and I thought it was prudent to mention here on my live stream. I think we're channeling down. That's what I think. I think the direction of the market, obviously, until something breaks, and I do mean that in way of positive news, something in way that can head this down channel in the market up. But he said maybe there's a potential here to chop back and forth in somewhat of a channel. I'm not sure. I'm really not sure. I think the momentum is to the downside, and I don't want to scare anybody. I really don't. Was just talking to a guest of mine before I came live, and was just about today, because I've really, really forced myself to sit and pay attention to the market. I do enjoy it most of the time. Today it got a little bit overwhelming because today was a tough day. It was a tough and frustrating day. This has been kind of salt on a wound market. I think it's just grinding back and forth, and the volatility is pretty rough. Okay. There's some stuff out there that seems attractive. I know that I've seen some airlines being floated. Obviously, Delta Airlines being the quality of the airlines, in my opinion. I've traded those names. I have not invested in those names, nor do I find a reason to do so at this time. I did put a pretty nice stake in General Electric. We'll talk about that a little bit. Again, you guys can stone me if you will, but that company will be fine going into 2021. But I'll talk about all the buys that I've got, but I'll also talk about some of the things, if you're a newer investor, some of the names that I feel like, if you're ignoring names that I feel should be in every portfolio, especially during a recession, for example, I really think you need to reevaluate, okay, reassess, and do what I did today. Shut the damn TV off. Shut it off and walk away, okay? There's probably a level of relation that you guys can have with this emotional feeling to the stock market. And I'm not going to come on here and let you know and tell you that I'm just a robot. Okay. I've always said that successful investing involves some robotic behavior and that you really can't have emotion. The stocks that I've entered into over the last couple of weeks are very, very long positions with two singular goals in mind. Number one, balance sheet. Number two, dividend growth. So I've added those in the taxable account. You guys know my Roth IRAs are on lockdown currently. I'm actually fairly confident in those names. The stock picks that I'm going to name for you guys to reevaluate are ones that I would expect to be in that nice retirement account. Okay. So these stocks that I picked up with balance sheet as a focus and dividend growth as a focus, cash on hand as a focus, minus AT&T. But AT&T is kind of an exception, as well as O Realty, ticker symbol O, Realty Income Corp. Added a position there. Broke my own rule a little bit, so I can also be self-deprecating as well. But good on me for coming on and admitting some of my mistakes. But nonetheless, we will make that a successful position. I just think my mistake came in taking a little bit larger position that I would have normally taken in the name, because I thought I had a pretty good entry. And then the headline news with regard to commercial real estate and leases maybe coming into jeopardy. I don't think that's going to be the case with Realty Income, but without doing a deep dive in knowing who all of their clients are, I couldn't tell you if some of their customers are going to struggle paying the rent. I just don't think that's going to be a problem, but realty income is being drugged down with REITs altogether. They've been punished this week. If you haven't paid attention, they've been absolutely crushed. So ill-timed, I guess, on that. I guess the silver lining is in it, is that that's not why I was buying it. I wasn't buying it to get the rock bottom price in it. The reason why I was buying it was for the payout. Okay, one acceptable payout. The ratio is fairly high on it. PEs typically break my rule a little bit, except for real estate REITs, right? That's the one exception. And I would have liked to have held the name within the Roth IRA, but we will make it a positive position. No problem in that. I'm not overly concerned. But I did have to take up an activity that cost very little to no money today, and that is go for a run while my kids and my wife rode the bike with me. So that cost $0. And it's amazing how much better and how much more rock solid I feel after doing such a thing. So if you can take a small page out of my playbook, it's probably not healthy. I just had, again, one of my guests that I'm going to come on is probably going to give you a little bit of an insight on how negative you can feel and how you can be like, wow, if I was investing in March, what did I do wrong in life? I just invested at the very wrong time. I knew how important it was. But if there's any consolation at all, you will come out of this stronger, especially if you abide by my golden rule, and that is don't sell here, okay? If you're going to do any type of activity along the investing spectrum, don't try to get crazy, okay? I'm very, very open with my trading activity, and I'm very, very open with my investing activity, and I keep those two in very, very separate lanes. I do not mix that activity at all. I don't, okay? You guys can see why I picked up Boeing on a trade, exited the position at 165, lived to fight another day. Now, I almost put the third position back on it at 120, okay? I had the order queued up, all right? Another 100 order, all right? Opted against it, okay? I'm satisfied because I was able to render that profit, roll that profit, house money, into some longer term plays for me. And although I do believe Boeing will be a $300 stock, when that's going to be is going to be sometime in the future. And if you're willing to ride quite a bit of volatility over the next couple months, I think once they bring the 737 back online and start producing that, I think once we start to get a crack in some of the numbers that we're seeing, the statistics as far as the pandemic that we have going on right now, I think if we have any type of crack in that, I think those stocks with cruise and with airlines are gonna shoot to the upside. I really do. I think once there's a light at the end of the tunnel, I think some of these that have been subject to headline news, right? One I spoke about specifically in realty income, those are going to shoot to the upside, okay? Still a lot of overweight ratings on stocks right now. The good quality stocks, if there was anything that I could tell you guys within the first 25 minutes of the stream, it's that you have to go after quality. You have to. You cannot justify investing in companies that are subject to a long-standing or an unprojectable window of volatility. Like, I can't tell you when people are going to start flying again. It took a couple years after 9/11 to re-engage and for people to really feel comfortable with getting on an airplane again, and they came back. I have no doubt that's going to happen as well. Some people are really taking this airline thing as an opportunity. All the best to you. I think if you have the strength and the fortitude to enter into them as investments, unlike I did as a trade, then lovely. But you're going to have to weather some volatility because these folks are going to report some atrocious numbers, okay? And whether or not that's baked into the stock at this point, which in my opinion, a lot of it is, okay, then you'll be fine long term. But there's very few investors out there that I've been able to come across that can have that level of fortitude and also hold these stocks in lieu of really good quality positions like Microsoft, Apple, J&J, Pfizer. Pfizer was the top S&P performer today, if I'm not mistaken. At least it was the top performing healthcare. So stuff like that, if you're overlooking stuff like that, thinking that you're going to get a pie in the sky name in some of the beat down names, okay, just make sure that you're prepared and you're buffered to do that. Okay. The first trade I made in Boeing, I entered into the stock at 105. I sold in the high 1-teens. Okay. Took myself $1,000 profit, and that was my buffer to enter into the stock at 99. Now the stock didn't just shoot up. It went down to $89 that same day. I was down $1,000. So I was actually even when using house money. All right. And then it went on its momentum, kind of melt up a little bit, quite frankly. And I should have taken profits at 185. I did not. I waited. I took the profit at 165 because I really wanted to leverage that profit. So 7,100 profit of house money went into some new positions. And that way I can stomach taking these into a little bit of downturn. I can stomach the poor entry. It was poor in realty income, quite frankly. I did see, I failed to mention Gen X dividend investor also in the group here. I think it definitely want to take a few moments to recognize Gen X and thank Gen X for all the great quality content. I know it's helped me immensely. It's really helped skew this new directive for me. I was on a wealth building track, and this has kind of opened up my box a little bit, and it'll make a huge difference in the long run. So thanks, Gen X, for making your way on. I've got Malone Money Mindset as well. So a ton of channel creators, man. If you guys ever want to pop on here, I extend that olive branch and, personally invite you guys onto the channel. If you do ever want to come on, it makes it a lot more fun to kick on and spend some time with the audience here. But that's my opening for this evening. So I know you guys have got a robust conversation going on. I'm going to cruise up to the top here and see if I can't cherry pick some of these questions. I will, however, throw another invite in here just in case you guys are feeling saucy. If you've got a few moments to jump on here, you're welcome to do so. You know how open and welcoming I am to everybody. But for you guys that are trying to make some sense out of this market, thank you so much. You will benefit over the next couple hours of live stream on the Independent Investor channel. I've been doing this a long, long time. I will be the first to say that I haven't seen a downturn quite like this. It's very unique, as they all are. They are very unique. In 2009, 2010, the banking system and the financial institutions were going to crash. That never happened, okay? The dot-com bubble in 2000, 2001, that was an interesting time as well. Brexit is coming to mind, December of 2016, where it did a little bit of a similar quick exacerbated sell-off and then did kind of a little fishing hook before it turned north again. So it kind of head faked on heading back, torn down and testing the lows. It never did. And that's initially what I was kind of calling this to do. But it's looking like this pandemic is at least going to stretch for maybe 10 more days than what I anticipated, getting some good news. I think the projections are off. That's just my opinion, okay? And I'm not a doctor, but this is YouTube, and I am entitled to my opinion based on 2 countries of precedence right now. And I'm not one of those folks that I'm going to sit here and say that the 2 previous countries responded in a perfect manner, therefore indicative of the numbers that they rendered on how the pandemic swept through the populace. I'm not going to do that, okay? I actually think the contrary. I actually believe that the United States has some of the very best healthcare in the entire world. And I'm certainly not going to pick criticism in a time when we have folks even in the community that are out there on the front lines fighting for this deal. I will say this. I find it interesting, the modeling calculations that are done where the majority of the data are coming from extremely hot areas, and not really sure if I'm understanding. I haven't heard if Montana is on a lockdown right here, or South Dakota for that matter. But you guys kind of understand where I'm going with that a little bit. To use the data from New York is slightly skewed. And I think at this point, I'm a little bit more hoping and praying that the numbers aren't what they're projected to be. And I'm talking on the low end. The high end, I can't even fathom that. I can't. We've already lost more than we lost on 9/11. So this has been extremely tragic, and I take it extremely seriously. With that said, I have to try to anticipate and come up with some level of hypothesis as to where I think the market is going to go. That's just what I do. I'm an investor, and that's part of the challenge of being an investor. It's not one of those things that it's not a challenge that I would look to take on with any level of confidence that I'm going to get it right all the time. However, I can extrapolate data just as well as anybody else, and I try to get it from as many sources as I possibly can. I don't believe the numbers. I don't. And I would say this. I'm not going to give X number. I'm not going to do that. What I am going to say is, based on the projections on the low end and based on, my ability, I can speak from my perspective. I've been locked in my house for 3 weeks. 3 weeks. I'm doing what it is that I'm supposed to be doing to protect our most valued treasure, and that's our elderly community. They're our most valued treasure in this country. They're our treasure. And quite frankly, if you guys want to know the truth, I would go to work tomorrow. If we could lock in every single 50 to 60, give them the option to doing so, and anybody over 60, give them the option to lock themselves in and focus some of that money and stimulus to that group. That's my soapbox. That's the way I feel. I'd go to work tomorrow because I don't fear this. I don't. And I don't live in fear either. Okay. But that's not what we're doing. We are giving it a few more weeks, which seems like an eternity. Sometimes I watch this stock market and I just wish that it would just click to close. But that's not what we have right now. And I think there's been a lot of comments come through that the U.S. typically gets it wrong until we get it right. I think there's a potential for that to hold true. I really do, because we do care. We want to fight. We have fighters on the front line right now fighting. And I tip my hat to those folks. If I had the ability and the expertise to fight, I'd be right there with you. I'm fighting kind of another battle behind scenes in my capacity. And that's all I'll say about that. So if you don't think for a second that Ryan's not doing his small part, I certainly am. And I would charge everybody out there with the ability to shelter to do so. Absolutely. But there's a lot of people out there that don't have that capability. And it's interesting to see some of the other cultures, countries, how they're pursuing their resolution. And there'll be a lot of data that turns out on how this affects Sweden. It really will. And who's taking a night and day approach to the United States, who's taking a little different approach than Italy and China as well. So the common theme here is that nobody knows. And so when you take an I don't know, and then you start to tack on a lot of statistics that we do know, that being unemployment, unemployment claims, job losses in this country, and we're estimating 3 million jobs lost, and it ticks up over 6. Okay, that's stuff that's quantifiable and it's real. And the stock market is not going to ignore that. It's not. And that's why I think we've had a lot of choppy activity, volatile to both sides as well. Because the way I explained it on Jason's live stream on Wednesday, I think there's a couple of opposing forces going on right now in the market to the upside. we have right now a pandemic that there's not a lot known about. Okay. It's causing a lot of death, it's causing a lot of angst, and it's causing a lot of fear. Okay. When you start to talk about the word fear in the stock market, that typically means that we're in it. All right. And it's usually the last thing on people's minds is looking to invest into fear. Okay. Is it something that you should be doing? Yes, of course, right? You've read it out of every book that you've ever read on investing, right? You're supposed to be doing. Damn hard to do when it's going on, isn't it? Right? Little difficult. Easier said than done. Easier said than done. But you guys know I've spoke for years on this channel about what I value, and that is action and not words. Okay? But with everything going on to the upside, really restricts this market from rebounding because we just don't have any glimmer of good news right now. All the trends are trending down. Therefore, the market will, in fact, continue to have downside pressure and limit any type of up swing in the market. These small blips that we're going to have from day to day, these 500, even 1,000 point blips, okay, these are really not to be taken seriously until we get some level of trending data. And the trending data is what's going to give us the opportunity to see at least the potential, okay, of potentially going back to work. Now, to the downside, we have had the Fed take historical moves, that of which I disagree with most of it. The only piece that I agree with is the small business piece. And then if they would have just done what I thought of, and that's targeting it to our elderly community, I can stand here in front of a YouTube community and tell you I don't need the money. All right. Is the government going to pay me? Yes. Why? Well, because that's how they solve problems, evidently, is just to throw a bunch of money at people that they can't currently spend. Right? There's people who can't pay their rent. There's people who own businesses who can't pay their businesses. Okay. And I got on a little bit of a soapbox today with a few folks that I was discussing this topic with. I'm not really sure if part of the problem is a little bit more underlying, but if I made over $99,000 ever in my life, I also would feel the same way. I don't need the money. But because I came from the dirt, okay, and a lot of these people who have started businesses are now jockeyed from their current lifestyle, all I would ask is that we deploy a touch of patience to allow some of these packages to be rolled out, okay? I just think that, man, when you get used to living with nothing or coming with something, and then you get into an opportunity with a business to start and be fruitful and be successful at, and that business, you start to take on employees, and those employees start to really, really count on that income and enjoy the job that they're working. Man, that is a level of responsibility that me personally have never drawn up the courage to take on. It's an incredible amount of responsibility that you take on. Therein lies why I feel like the majority of the stimulus, I don't think 350 is enough. I just don't. It's just my opinion. And where a lot of the money went in the stimulus, I just think it's absolutely stupid. I'm not going to get political on this. As you guys know, I typically don't do, but I disagree. And, you know, the Fed just making up money and doing it at a time now where it seems to be extremely necessary to pump liquidity into the market. It's scary. All right. That debt's going to have to be paid down at some point. And I hope we do it. First things first, I think we need to get over this extremely large obstacle. And I think if we're able to facilitate a discussion every Friday night on this topic and the investing topic and how it specifically impacts y'all's lives, I think we're taking small steps in the right direction. So thank you so much for making your way on and helping me facilitate this discussion, man. Very, very cool. I got Miguel Mendoza in the group. It's awesome. I got Kyle with the passive income investor and JMac Investing. Got me on April Fools and said that, oh, Realty cut their dividend. Yeah, he had a guest on his live stream on Wednesday, JMac Investing, and he duped him big time. It was terrible. It was quite frankly embarrassing. And the guest asked Jason to actually dub that piece out. And from that guest's knowledge, that got aired. So that got pushed out through the entire YouTube community. So thank you, JMac. Very freaking funny. I really kind of felt bad for that channel creator that came onto your live stream and was looking to fill in for you and, you know, just drive the salt in the wound on your O position. I'm just kidding. I'm just as happy to own the position. But yeah, that got my attention for sure. Hey, man, I tell you what, if you can't laugh through these times, man, you need to reevaluate your program, all right? There's a good group in here. Good group represented by a lot of good folks all over the world, quite frankly. And I think it helps to take a moment to put a little humor into the deal. I mean, what else are you going to do? You're going to control this market with your mind? I'm not. I haven't figured out how to do that yet. So I stopped trying a long time ago. I just invest in the best quality, dabble in a little bit of passive investments in there. And I live to fight another day. I'm perfectly fine. So I'd encourage you guys to jump on that train as well. I got Minds in Motion here. Really cool. It's great to see you. So great to see you. I follow you more on Instagram than I do your videos. So thank you for all those offerings. Minds in Motion is also a great channel creator. So if you guys are catching this live stream after, that's my shout out for Minds in Motion. It's subscribe to every one of these channels. But as I go through and highlight these channels, you can take a pen and a paper and write these names down and make sure that you're popping over and supporting these messages. Grow us stronger as a community, man. That's what it's all about. I love it. So J-Max, he's freaking laughing. He's having a great time, man. That's great. Yeah, I felt bad for that channel creator, actually, man, because I was like, you should have seen the look on his face. He was just like, you know. So anyway, I don't know if this is for me. I don't have a mask. Like I said, I'm not afraid. I'd go to work tomorrow. Would have went to work 3 weeks ago, but we're trying to honor what it is we're trying to do to be part of the solution and not part of the problem. Okay. You wouldn't have seen me blogging from the beach down in Miami during this time. I tend to take things a little more seriously than that. And this has got my undivided attention. All right. Good stuff, man. No way. Hope he represents well at Joe Trick. So that's really cool. So yeah, Joe was the one that was on with me earlier. He was kind of filling me in on and being honest. He was like, man, I don't know about this. I don't know about this. This is not cool. No, Joe, it's not cool. It's sure not. And I was trying to ask a few questions here and there, trying to get a feeling of, you know, how much exposure is there. It's amazing how our exposures can be taken in different strides by different people. That's why I always stress making sure that your exposure, like if you were given $1 million or you had built up $1 million portfolio, okay, you know, would you be able to go through this volatility and watch it fluctuate 10s, 20s, 30s, even 40s of thousands of dollars per day? Ask yourself, okay, there's representatives in this community who do just that. And the real takeaway isn't to say yes or no, I could handle that, Ryan. The idea is to build wealth over time, So you allow yourself the opportunity to grow tolerance and grow a little resilience to the market. It's going to happen over time. But if you gave somebody $1 million portfolio and said, here you go, you can do anything you want with this $1 million portfolio, and it was subject to a market like this, they'd sell out. The untrained investor absolutely is going to sell out. If you gave them an investment portfolio and they were unprepared, right, to deal with that type of volatility, because they would be paying attention to everything that they aren't supposed to be paying attention to. And that's the key. All right. So I just saw Joe pop in here. Very cool. We're under 40 minutes. We're cruising. We are on schedule. Absolutely. I am going to go over these quick purchases in my portfolio rapid fire. So I'm going to fire them at the group right now. There's 12 of them. There are 12 of them. These strategically went as a supplement into the taxable account. Again, emphasis, balance sheet, dividend growth. Okay. You guys can grade me and tell me how I did. Pick number one, AbbVie, ABBV. Okay. Which is part of healthcare. And I think healthcare is really a diamond out of this. So if you don't have healthcare exposure, you probably need to look at beefing that up a bit. Number two, AT&T. Okay. AT&T. It's been one that I've owned before, and I figured my entry at a 25% discount was a good one. It's floated back a little bit, a couple bits. I'm happy with that. AT&T is fine. I'll rake in the fat dividend until it decides to give me some capital appreciation. Financials is a buy. You could probably throw an arrow at any of the financials right now. I like them all. I really do. There's a ton of financials out there. The big banks are really, really good. I know Gen X Dividend Investor is a big fan of Goldman Sachs. I would put Goldman up there in the top 6 of banks. I would include Morgan Stanley, which is typically not talked about very often. And then you've got the obvious JP Morgan Chase, which is a long holding and a crowd favorite of mine specifically. But Wells Fargo looks really, really good. But the position we took here was Bank of America. Bank of America at 100 shares, starting position in BAC. Again, healthcare, balance sheet, okay? Bristol Myers Squibb, BMY, the ticker symbol. Also in healthcare, one of my faves, CVS. We made a pile of money with it last year. It was nice to see it go up. I exited the position. Nice profit, rolled it into other stuff. Where it is right now, I have no idea. Hell, it's probably in shares of Johnson & Johnson. I don't know. But we established a new position in CVS Utilities, which have been crushed over the last couple of weeks. Very, very tough, man, because as a defensive sector, it's tough to see Utes adjust the way that they have. But Duke Energy, DUK, the ticker symbol there. I've already told you guys the General Electric pickup there. Time right to buy. They've done some trimming. I absolutely think the CEO is one of the best. I'm a big Larry Culp fan, big fan. He's turning the company around. Didn't have a whole lot of exposure over the previous 5 or so months before this thing fell off the wagon. And I think buying it at $12, $13 a share would have been a bargain. Here at 7, this is a deep discount on General Electric. Honeywell on the quality side, industrial side of the house. I just had my United Technologies split and merger occur today. So it's all cattywampus in my portfolio. You should see it. It's really weird. And it typically does this, but they're spinning off Otis and Carrier and merging with Raytheon. The new company will be ticker symbol RTX. That's Raytheon Technologies. So very cool stuff there. But did end up buying Honeywell, which is kind of the brother and sister of, at the time, UTX. Okay. I've owned Raytheon as well. Great defense. I'm really stoked to see these two companies come together. What it's going to mean for the smaller companies, the verdict is still out. Typically, that does not render or fare very well for those companies. But they are good businesses, and they're not really businesses that you would expect to look at all the time as a standalone company, because I would rather see you go into an industrial mega player like a 3M, for example, and the like. But Honeywell is probably the top industrial pick right now, bar none. Bar none. The next one on the list is Emerson Electric, but I didn't want to get too crazy with industrials at this point. Okay. Next, Leggett and Platt, ticker symbol LEG. It's being punished with every other industrial, but for dividend and balance sheet, we're good there. I really think once we get a shed of light here, these good quality companies, man, are going to come to the forefront. I've already talked about Realty Income. So again, you guys can grade me, throw tomatoes, unsubscribe from the channel if you want, if you don't like the list, if you think there was strategies I should have played. Now remember, this is in addition to my existing holdings. And the list that I'm going to give you next is the list that I would expect you to be cross-checking against for stuff that you really need to have in the portfolio, in addition to these names that this is out of my personal taxable account now. All right. Southern Company and then Starbucks to round out the list. Okay. So Southern Company in utilities and Starbucks in discretionary. So that rounds out the list of 12. Okay, so you guys can grade me. Tell me how you think I did. I know I did fine. It makes sense for me. If it makes sense for me, then it's good. But to come on and declare it to a YouTube audience, I think it's a lot of fun. I just threw 12 stock picks at you now. Obviously, a lot of topics now that I could be throwing out via YouTube videos. I'm just choosing not to do it. Okay. If my heart's not in and I'm not going to do it, if you guys have a problem with that, certainly hook me up with some topics that you'd like to see me do. That's fine. I have a lot of topics come through. I just haven't been very motivated outside of the live stream to engage with the audience as far as the 5 to 10 minute videos. I think a lot of those are pretty shallow, and quite frankly, a lot of people think they're entertaining at best. And I think there's a hell of a lot more value that can come out of the live stream. But guys, with that, I'm going to kind of hold my position in the chat, and I'm going to drop Joe in here and let him talk to the group a little bit. That way it can kind of get me over to the questions, and we can play a little bit for the remaining time. Joe, you got me okay?
I hear you got me.
I got you fine, man. Awesome. Thanks for coming on. So What were you telling me before we went live, Joe? You gotta share it with the group.
This got me running scared. I didn't sell off, but I definitely didn't make any moves this week. Just out of pure, like, I had to step back, disconnect. A lot of cases are coming out near me. Like I told you earlier, it's for the first time I know people, you know, family, friends that have it now, and it makes it real.
No doubt about it. It's real. Do you mind, Joe? Can you give me some idea of some of the holdings that you have in your portfolio, and give me an idea, like if you could go back and maybe do something different? You don't have to name a bunch of things, but like in reflection, I know everybody typically looks back and they say, God, did I do this right? Did I? And that's what I was doing today with the 12 stock picks. These are incredible companies, you know, and to second guess it, I just shook my head and I was like, what are you doing, you idiot? Do you want to invest or not?
Yeah.
Can you do that for the group, Joe?
Sure. So I started with, you know, a TD Ameritrade account. I started with oil stock or energy stocks, really. Some ExxonMobil, some BP, Holly Frontier Corporation. Yeah. And this before I knew what I know now, which isn't much more, but, you know, compared to what I did know when I did start, it's much more. And I bought those, and then I just kind of let them be for a while, kind of fell off the wagon a little bit. Then I got back on, and that's when I started following your channel. I started picking up some more stuff. So I have some Johnson & Johnson, I have 3M, I have Caterpillar. Nice. What else I got in there? Got a couple other ones that you've recommended that have come through. But then I also opened up a Vanguard account, and I bought some VFIAX. I bought some VYM. I bought
on the way down, Joe, or how on that? I mean, you could have bought at 25,000 and you would have been in my camp, because it went down so fast. Like this opportunity right now, I'm a little envious because I still have money. I mean, I've still got $60,000 to deploy, and I'm good with my allocation now. Yeah. But I think a lot of people are struggling because they don't have cash now. And they're like, dang, this market's just screaming at me. Like it could continue south, but what's going to happen if we get a little bit of trending data that's positive? It's going to be a snapback, guys.
Yeah.
Come on.
Yeah. I mean, I bought it on the way up. Most of the stuff in the Vanguard, the VYM, I think I have VPU, like I said, the VFIX, and they were doing all really good. And then they all started going down, and I kept buying more through last month, like I was telling you. And then last week, I just decided to pump the brakes a little bit, hold off, and say, I gotta disconnect a little bit. There's a lot of things going on. I want to reassess, reevaluate my whole financial situation, with me and my wife. And
You got kids?
I have a 7-month-old daughter. Yeah.
Congrats, man.
Thank you. So
That's what it's
that's why
about.
I asked you about the 529.
Sure.
Yeah. So, which
Yeah,
I have a lot more questions for, but I'll save it for another time.
No, I'll answer really quick. I took some of that Boeing profit, that Boeing profit, and I put 200 each into my kids' UGMA. But I do have the 529s. We just do a small drip in it, $25, I think. Initially for my daughter, man, we were heavily funding it. And it was growing like too fast. Yeah. And some people may think I'm cheap, but we were like, Jesus, like we got to take care of ourselves too. It's a good thing. There's drawbacks and there's positives to both. Did I share that video with you last week?
You did, but I think some of the questions I had on it were a little more in depth. You kind of just did a quick comparison between the two, which was good. Yeah.
It's YouTube.
Yeah.
It's shallow, man.
What I'm contemplating is actually buying a bunch of Disney stocks and, for her as like a 529, so to say. Instead of putting the money there, I was going to try to buy a bunch of Disney once Disney went down. I'm actually waiting for it to hit around the 90 mark.
Yeah. I mean, you got a good entry here, I mean, you try not to pick the bottom in some of this quality stuff. Disney, I'm going to cover this list of stuff that must have. Like, okay, so you see a lot of the dialogue out right now that only a stock picker can win in this market and passive investing is dead.
Mm-hmm.
What are you talking about? Like, you can't buy an ETF here at 31.5% down in the S&P 500? That's precisely the time where you want to invest as a passive investor. What are you talking about?
So that was a question I had for you. I want to ask you was, is it smart to buy ETFs right now? Because I've been buying more ETFs right now than the single stocks to build up that retirement account.
Well, I mean,
is that a bad thing? I mean,
it's not a bad thing. Listen, two different strategies, right? And for those gangbusters and young guys, Joe, you're young, right? So, and I don't mean to impugn you or any of that. You're young, okay? Yeah. You're lucky. And you're figuring this stuff out a lot younger than most people do. So you've got 30 years of a time horizon. If you've looked at the math and looked at the compounding effect, the way that you're going to capture that compounding effect is by investing in the market in the very best way that you can, gaining diversification. Okay. It's worth saying 3 times because so many people overlook it for the opportunity to buy a basket of 30 stocks. Okay. Now you can be diversified through the lens of a single stock portfolio. However, the S&P 500 collectively has allowed you to gain all of the mid cap and large cap appreciation that the stock market has to dole out. And that, my friend, is the important piece to making sure that you're making that 8 to 10%.
Yeah.
Don't get crazy, right? If you're investing in single stock, you're looking to gain an over and above average rate of return than what the stock market can render. Okay. Mm-hmm. Now, let me caveat that statement. By taking an ownership stake in a single stock portfolio, you're telling yourself, hey, I can weather any storm. I can weather a volatile storm. I can look at my portfolio and understand that maybe 2 of these are going to be lemons and go through a General Electric swoon or a Kraft Heinz food swoon or an O Realty Income swoon because of no fault of their own. Because you see where I'm going with this?
Yeah, absolutely.
And I think the diversification in the ETFs allows you to absorb that type of activity, man. You're going to have stocks that'll outperform in the S&P 500, and you're not going to capture that appreciation. Now, of course, you're going to capture all the depreciation as well. But when this thing turns around, you're going to be guaranteed to catch that bottom with some absorption, right?
Yeah.
And you're going to enjoy that on the upswing.
Yeah, that's why I'm trying to do both. I'm trying to build both portfolios, the single stock one and then the ETF one.
And keep in mind too, Joe, you do have a 401k,
Yeah,
right?
I do.
So that can kind of help drive some of your decisions, okay, to be a little bit more potentially aggressive. Now, I always look at having a backup plan. For example, you do the 401k, it's diversified. It
Yep.
may cost you a little bit more money to do that, but it's a forget it account, right? You just fund it and it's good. It'll be there when you and your wife and your multitude of children get older someday. Okay, it'll be there, right? So set that aside. Then you layer up and you're like, okay, now I've got the individuals for myself and my wife. My wife has higher risk tolerance. Maybe she wants to own the Googles, Facebooks, and Amazons of the world, and you don't have quite the risk tolerance that she has, or vice versa. Okay. And you can build those two accounts to really reflect the layers that you have. Okay. And so you can justify owning some of the quality in your single stock portfolio, or you can own a 50-50 mix. That's what I attempt to do. Look,
I take some comfort in having both. I don't know if it's just a personal preference, but
yes,
to look at my account and say, I have all, these ETFs, I have this mutual fund, and then I have another account with these single stock options, and I have my 401k.
Yep.
I'm like, okay, it makes me feel good. If I feel like being risky, I go into single stock. If I feel like being safe, I go into the other one.
And I think you just said something that's really important to mention. I look at some portfolios online, and there's some really, really good ones, some more riskier than the other. Like I look at a Matt Money portfolio. It's a good one. It's really, really impressive, but it's good for him. I wouldn't take that portfolio and put it in the hands of an uninformed investor. Okay. However,
he has a lot of energy.
Well, sure. But here's the thing. Matt is in line with the fact that he's 28 years old. He's got a good job, good income. Therefore, the risk reward is going to be there. Okay. And Matt will succeed as an investor. There's no doubt in my mind. Zero. Because I've talked to him, and I know for a fact that he'll succeed because he'll be able to weather those storms. He's an investor. Okay. I wouldn't dub that on everybody. Some people have the potential to be an investor. They just need to fine tune, right, their allocation a little bit. And that sounds like that's what you're trying to do. Unfortunately, on the fly a little bit, because you can't really appreciate when you're doing it in March. You're like, man, I was investing in the upswing, man. This is great. Investing is awesome. And it is, man. It is. But as awesome as it can be on the upswing, it cannot be a negative thing on the downside either. So you got to be kind of fair about investing, right? But I do think it's a good idea. That's how I invest, because I like that passive base, capturing all of that appreciation, all that depreciation, all the while. Remember what you're missing something, and maybe you're not, but I would love to have you say, Ryan, I get it. I mean, I'm kind of frustrated, which I am too. And every other investor's like, geez, Louise, really? This is interesting to say the least. However, where does your focus go in the portfolio? That S&P is going to pay you that 2% dividend. Those dividend stocks are going to pay you 3 to 4% good dividend yield.
I'm okay with that.
Sure. And those are the silver lining pieces. I shared a link. I forget it. Gen X knows what I'm talking about, to run through the dividend exercise. He's got a really, really good website that I went to, and it really opened my eyes. Something that mathematically I knew existed, but to provide you some comfort in knowing the power of investing for 20 or 30 years into a basket of dividend-paying stocks, and what the effect of that, just by doing the dividend reinvestment program, has over that money. And the comparison allows you to put the same amount of holdings into one column, that of which you're going to dividend reinvest on, and the other that you pay yourself the dividend in cash. And what was really ironic and eye-opening to me is the fact that your money will grow exponentially, even in the category that you pay yourself the dividend. But the real takeaway is to understand how quickly that money compounds on itself by reinvesting those dividends, my friend. That's going on right now. Yeah. As you're just shaking your head at this market and you're going, God dang, why am you? And I did that today, man. I admitted that to you. I was like, dude, I was sitting there today and I'm like, I'm just paying attention to the ups and the downs, man. That's not where your focus needs to be. And I'm not going to allow myself to get into that mode, but I am human being and I work hard for my money, man. I'm one of those folks that have built this wealth. I was not given anything,
Yeah.
and I would assume that you're the same,
In the same way.
It's hard.
And that's why it's hard. Cause like I said, I came into it hard in January with a full focus on investing and building these accounts.
Yeah.
And it was doing great. And then to go through this, I'm like,
this is incredible, man.
Yeah. What the heck? Like, this can't be happening right now. Like, this is when I chose to enter the stock market.
So I'm a funny guy, Joe, and I know you'll stick with the community and all that stuff, but I mark my word. I promise you this. Okay. All right. You can hold me to it. I'll go ahead and make my promise in front of 2,000 people. That's who catches these live streams every Friday. I'll remember we had this conversation. Okay.
Okay.
And what I'm going to promise you is this. Okay. It's probably never as bad as you think it is, and it's probably never as good as you think it is. But when I remind you of this conversation, I want you to understand how fulfilling it's going to be that you invested, took your money into a downturn, and I want you to explain to me someday when I remind you of this conversation how good it feels having done so. And this is going to be an interesting one because this is tested me. It's tested every wit I've had as an investor, as a trader, as a stock market connoisseur. It really has. I've done well, and I'm not trying to get too overzealous. I'm sitting on 13.3 right now of just trading activity, building up a buffer, things that I would have never had the opportunity to do if I didn't practice what I preach.
Yeah.
Practicing what I preach. For example, cash on the side. How much cash on the side did you have before you entered into this downturn? Don't answer. How much preparation did you have for potential volatility investing in a market that was bumping up against an all-time high, right? We talked a little bit about this. The best time to invest is when you have the money, etc. You have a long-term horizon, so you'll be fine. You really will. But I think in retrospect, to be fair to yourself, I really would ask you one thing, and that's to be constructively critical of your program and say, what is it that I do? And I asked you this before we went live. I said, humor me a little bit. What is it that you could do if you could go back and maybe add one thing? You had a magic wand and you could say, I would do this different, or I would do this. What would it be?
Right now?
Yeah.
It would have been do a little more homework before I started. I wish I would have put, your channel or someone's channel or something to make it click, just 6 months prior before this all, before it started. Cause I would have went about it different. I feel like, I am all over the place because I am trying to fine tune what I want to do.
Yeah, man.
How I want to do it, and learn what's important to me. But I can't go back. I can't change that. So now I'm here with you and everybody else in the community looking for support, what you guys offer, every week in and week out.
Would you have felt more comfortable having a good cash buffer? Again, not to talk specifics, but I would earmark that as something that's a lot of the times overlooked, and it's something that I preach about all the time. Joe, I got a lot of guff for that, man, on the channel. Like, Ryan, cash is a terrible investment. Yes, it is. Look at me now.
Most of mine's in cash. Yeah.
Awesome.
Yeah.
So that helps, man.
I've been trickling it into everything else. As every week goes by, like I said, every week. In March, I think
we're 3 weeks now into this correction from the fake.
Right. But I was throwing in a lot every day, every week, taking from my cash because I know I did have a big cash build up and I'm getting into this more. But then like I told you, I had to just take a step back. And
I think you're going to surprise yourself at how those cash injections pay off.
I hope so.
No, don't hope. I mean,
all right, I will then.
I'll hope for you that this current systemic threat is merciful. I'll hope as far as that goes. But as far as your stock market moves goes, take some comfort in knowing that you picked the best quality. I mean, you've named some quality that you got there. There's a ton of people in a lot of crazy positions in this stock market. I would love to just take a sample of 100 portfolios from Robinhood community and look at and see what people are investing in.
Yeah.
Remember last year, 2019, how all the hype was talking about MJ stocks, and there wasn't a channel out there that wasn't putting out MJ content, except for me. My channel suffered for it.
Yeah.
I'm not saying that that's the reason why I have 20,000 subscribers, but I will say I think I should have 100.
Yeah. Did you hit 20,000?
Not yet. Thanks for rubbing it in. Good
Sorry.
grief. Thanks, man.
No, I
Yeah,
suppose.
we'll be there. We'll be there in
I
about
don't need
6
to hit the
months.
like button.
It goes. Hey, that whole subscriber count. What's cool about this live stream is I enjoy coming on and hearing insights from somebody like yourself who subscribes to the channel, who's a real investor, supporting a family. Oh, that's the stuff that means everything to me, quite frankly. Being a YouTube superstar is really not something that I prescribe to. I prescribe to be the best father, husband, be as healthy and spiritually fit as I can. But as far as coming on and just putting out content to put out content, I was very upfront at the top of the stream. This is what I enjoy doing. I enjoy doing this live stream. And my brother gave me a little bit of encouragement and said that not a lot of people can do this the way that you do it.
Even being here talking to you is not easy. It's hard being, looking at yourself, looking at you talk and hearing yourself talk. That's not easy.
Unnatural. It's weird.
Yeah. We do a great job of it, though.
Thanks, man. I appreciate it. Well, we're coming off of when I used to invest in the market, things are moving so fast with the emergence of information. Like there's not a piece of information that can't be released that the entire world doesn't know about within a couple milliseconds.
Mhm.
You can consume it from any angle you want too. If you want to get it off of Twitter, you can. If you want to get it off of, CNN or Fox News, you can, whatever. Okay. I'm not going to tell you what I consume mine on because most of it angers me. Okay. That's why my filter is on most of the time, but I do pick up on little stuff. But today was like nothing but doom and gloom, man. It's like, dude, they must make a fortune just selling this stuff to people, man. And it was like, Jesus, can't you do a story on the front lines? We've got a sample of the front line in this fine community here. And all I can say from the bottom of my freaking heart is thank you. That's what's going on. That's legit.
Yeah.
They're at war right now. Let's acknowledge a little bit, man.
I have a lot of friends and family in healthcare, and I hear so many terrible stories. I just don't even want to hear them anymore.
I know, man.
Something good, please.
I know. It's just terrible, man. And you're in a very, very tough spot where you are too. I just wish you all the best and to stay safe and try to stay as positive as you can. There's no perfect life, man. There's just life. And the one thing that we do all have in common in this group is that we're all hopefully trying to reach something a little bit better, honestly. And I don't think that's very far removed from a lot of successful people. I'm not gonna dub everybody in that camp because there's a few people that just don't care. They don't care. That's what this initiative is all about for me. It's about not only seeking my personal initiative, but it's also to try to bring as many people along with me as I can, because I think you'll find, Joe, that this gig is a lot more mental than it is physical. It really is.
Absolutely. So 90% mental. Like you said, you got to take the emotion out, and that's
it's easier said than done. But it's kind of
I'm not too bad with it. I got to be honest.
Nice. I think there's people that are definitely going to succumb to the pressures that this potential market. I hope we don't go there. I hope we don't, because the market really does have an infinite amount of outcomes that it can dole out to investors. And I'd like to see investors like yourself not really put through that level of stress test. I'd like to see it for myself as well, because I've got all kinds of tools in my tool bag. I'll shut it off. I really will. I won't look at it for, 4 or 5 months if that starts to happen, if it starts to creep below a level where monitoring it is more valuable than shutting it off. And it has been. It's been very profitable for me to kind of monitor and pick my spots a little bit. Been off on a few, but I've been right on the money on a couple as well. So help us generate a little bit and help us take a little bit of an accelerated step in the right direction toward our goals, So I look at the stock market as an opportunity vehicle, and I hope everybody looks at it the same way,
Hey, let me ask you a question, a little bit off topic.
Please.
Do you have any books that you'd recommend?
The Intelligent Investor is a good one. It's one everybody recommends. The one that's really affected me the most is The Blueprint for America. If you want to read that, that is a good quick read. It's really good. Touches on all kinds of cool stuff, like how to invest in silver and gold correctly, like what the Blackstone Group does. That's why I started talking about the Blackstone Group, and everybody's like, who are these guys? What are you talking about? It kind of alludes to one of the biggest secrets that an investor can enjoy, and it alludes to it all the way through the book until the end of the book. And it gives that away, but I won't give it to you now. You got to read the book. I loaned it out to a friend of mine, and he never gave it back. He traded me the Chris Farley documentary for my Blueprint for America, which is another phenomenal book. I'm a big Chris Farley fan, but I gave it away, and I had pages earmarked, and I had notes in the margin and stuff. That's probably been the most influential to me.
I see a lot of people throwing books out on the comments. So that's good. I appreciate that.
Oh, for sure. These are all going to be super, super good. To be honest with you, I'm not a very avid reader.
Neither am I.
A good option too is to watch the documentary of Warren Buffett. Dude, it's legit. Half of it's investing philosophies. After that documentary, I mean, it's touching, bro. Like, trust me, he'll walk you through like his wife passing away, and dude, the guy's legit. Straight up. I gained more respect. I'm not one of those like rah Warren Buffett is a god. I'm not like that. I don't look at life that way. Like, if I met Warren, I'd be like, hey Warren, how are you, sir? Like, I just don't care. I don't look at other human beings that way, that they need to be put on a pedestal. Definitely respect the approach and the savvy, but it walks you through like how Berkshire got formed and some of the moves that he made initially, his friendship with Charlie Munger. It's legit. And so if you didn't want to read, I think it is available in a book, but there's an hour-long HBO special, and I think it's probably available for free now. You could probably
do that.
Fix it if you pick it up through Netflix. Do that. It'll affect your life, man. He talks about some stuff in there that's like make you think about your own program, and you're like, okay, maybe I could do that. Like Warren does this. It's easy because some of the stuff he does.
The audio books, so those I don't have a problem with, but sitting down reading anything more.
Yeah, I like Jim Cramer. I'm a big Jim Cramer fan. All of his books are good. But yeah, I think the Blueprint for America is okay. It's fun. It's fun. It's really fun. Yeah, Rand Paul.
Yeah.
Yeah. Any other questions, man?
No, man. I'm actually gonna hop off and just enjoy the live stream.
Do your thing, man. Do your thing. Thanks for coming on, Joe. I really appreciate it, man. Be well, brother.
Bye.
Yep. Awesome. Thank you very much to Joe Trick. I really appreciate it, man. If anybody else wants to kick in, I'll throw another invite in here. Otherwise, I am going to continue on with my mega list of stocks that you'll need to cross-check against for portfolio strength in a recession. Okay. I told you that this was going to be a little bit of a practical video on how you invest in this particular environment. I know there's a lot of crowd favorites out there, a couple that didn't make the list. Waste Management, number one. I'm a big fan of Kroger Foods. It is actually one of those stocks that I've invested in and made a fortune with. Speak of Warren Buffett, actually took a large position in Kroger Foods here just recently. Well-timed, I might add. Kroger has really performed well through this downturn. But I thought I'd go through the list rapid fire here. So I'm going to throw some other stock picks at you. This is not rocket science. Okay. I'm not a person that has just newly discovered these companies. We offer these companies to draw awareness to these fine companies. So when you're looking to build your portfolio and you're just confused and you come to me and you're just like, I don't get this, man. I don't know what to invest in. Here's some ideas. And you might have heard of some of these companies. I'll start now. Walmart, extremely encouraged by the performance. Sales up 20% here in Walmart, ticker symbol WMT. So these are stocks that I feel like if they are not in your portfolio, every single one of these names, let me do a review. I don't want to lie to you. Every single one of these names are in my portfolio, every single one of them. I've got a new guest and I'm going to bring him on here in about 4 or 5 minutes. I'm going to cut through this list and then I'm going to bring William on, who's a guest to the channel. And we'll talk a little bit about another opinion from another investor and see what he's got shaking. So give me about a couple minutes, William, okay? And I'll bring you on. So Microsoft is another one, guys. Look, man, if you don't have a position in Microsoft, I've been amazed at how a lot of these growth names have really held up. And I don't really consider Microsoft a pure play growth company, but man alive, it's kind of transitioned from growth to value, okay, and now back to growth. So it's been a really interesting to watch this company evolve over the years, man. Microsoft, say no more. Plain and simple, pretty simple, right? All right. I'm not bringing names to you that's the next best thing. Okay. I don't play that game. If you want to be an investor, you'll find that it's a lot easier than you might think that it is. Okay. The question is, how many shares do I want to buy? All right. Microsoft. The next on the list is a super big surprise. It's it's not a lot of people know this company exists, but that is Apple Computers. All right. Apple Computers is right up there with Microsoft. Top 2 technology, man. If you're looking to build a portfolio out, Apple really does make my list of top 5 of companies to own forever, as well as I threw Walmart in there as the bonus pick. Man, Walmart's been really, it's been great. Okay. Now, when the market turns around, I really don't know. Walmart tends to kind of just perform on its own. There'd be a lot of stocks that outperform Walmart, but it sure is a nice one to have as a buffer in the portfolio. Really great company. It's the only place I'm going right now to keep me alive. Johnson & Johnson, number 1 in the healthcare sector. And then I've got 3 that could be optional. Pfizer is next. Pfizer was the top performer in healthcare today. Merck or AbbVie. Okay, I own them all. All right, but when you're doing a quality check of the portfolio, make sure that you're cross-checking it with this quality. 3M from a valuation perspective. Caterpillar not too far behind, but either one of those you can win with. 3M I gave the edge to. The first stock that I mentioned is the one I give the competitive edge to. So if you guys are really interested in beefing up on the industrials sector, right? I mentioned my Honeywell pickup here and General Electric. I could eat crow on that. I don't think that I will. I don't think there's a lot of downside risk. I really think that it's tested resistance down in the high 5s right here. So picking it up $1 over that support is really not that big of a deal for me. Relatively large position, I might add. Coke or Pepsi, KO takes the edge, but not by much. Both quality companies. I own them both. Disney in telecom services, the newly formulated communication services sector. Exxon or Chevron, you bet, man. Right here, if you're going to value pick, I'm not going to tell you that oil is something that you need to have exclusive exposure to. But ExxonMobil and Chevron, if you want to add a little bit of exposure to the portfolio, don't get freaking crazy on me. But if you want to sit on a couple at extremely recessed valuations, man, these 2 companies right here, cream of the crop. And finally, Procter & Gamble, Kimberly-Clark. I give the edge to Procter in staples there. If you want to go ahead and take a stab, Procter does make my top 5 of stocks to just buy and own forever. As you'll hear, Procter, Disney, J&J, Apple, and Walmart. JP Morgan usually falls in that list because I like to have a financial in there as well. But JP Morgan takes the cake there. Wells Fargo, Bank of America to round out the list of stuff. If you wanted to quality control, check the portfolio, you can go ahead and do that. But without further ado, I'm going to bring William into the group here. Let him get dialed in. Hopefully he's dialed in. He's ready to fire away, man. I really appreciate William taking the time here. So I'm going to bring William on. He's going to address the group, and that way I can get to some questions. William, how are you, man?
What's going on, Ryan? How you doing?
I got you fine too, man. Your sound's coming through awesome. Great to see you, man. Where are you hailing from, and how long you been investing, and what do you think of this market?
Well, currently, I live in Fayetteville, North Carolina. I'm actually only 19 years old. I'm actually very new to your channel. Actually, I have followed a lot of like what you've been saying for our new investors, for our new investors out there.
Yeah.
And I actually have funded my Roth IRA account. I put in $1,000 into it, and so I'm kind of here to represent the younger audience. And so my question to you is, what would be a nice starting platform that you would recommend? So I don't have a problem being conservative. I've even watched your videos on the grading scale, if you're like conservative, basic, or advanced. And I think I'm more of like a 4 or 5 in that like a conservative, basic kind of category. I know that like $1,000 isn't a lot of money. However, though, I also don't want to be too conservative. I do want to, what I'm saying, reach into the market a little bit. And so what would you say is a good mixture of ETFs or single stocks that I should go for?
Yeah, sure. So you got plans? Are you in college?
Yes, sir.
Yeah, studying to get a pretty good job and all that stuff. That's going to be the biggest investment that you make is in yourself. So I commend you for taking that $1,000. I disagree with you saying $1,000 isn't a lot of money. You're talking to a guy that doesn't come from a lot of money. Yeah, you bet.
Yeah, same.
You're representing a 19-year-old that is starting with $1,000. I challenge any other 19-year-old out there to save their first $1,000 and come onto the Independent Investor channel. It tells me a lot that not only do you come to the channel, you're new to the channel, but you decide to kick on here with a live stream with me. I commend you.
I appreciate it.
Yeah, you got a bright future. First of all, congratulations for finding the channel. If I was 19 years old and I had the opportunity to come on, which I tell you, Matt, you guys' generation has all the cards in front of you, man. And I really, really, from the bottom of my heart, thank you. Because guys like myself who are 42, who reflect back over a lot of the successes that we've had, but also some of the mistakes that we could potentially avoid. Hopefully that's what comes through in the message, because starting your Roth is key. So you heard something from wherever to get that money put away, because eventually, man, you're going to be 59 and a half. And who knows what's going to happen over the course of your life, man. Get married, have some children, have a family, successful career, all this stuff that I know you're destined to do, right? But you want to reflect back on these times, man, at 19 and say, man, I made the right decisions. Here we are. To answer your question, if I were going to speak to myself at 19 years old and give me the best awareness piece of financial building, I would start with the S&P 500. Okay, everybody in the group knows that's what I'm going to say, but it doesn't do me any good to sit here and say, hey, invest in Johnson & Johnson, Microsoft, and Apple. Okay, in essence, that's kind of what you're doing. But instead of the tech sector maybe running into a little bit of hiccup, or you invest in a real estate REIT, and real estate runs into a hiccup, or you decide to run into, you're like, okay, everybody's buying Campbell's soup right now and Cheerio cereal. I'm going to buy General Mills and Campbell's soup right now. Well, what happens when this data turns around and those sectors start to underperform? By owning the S&P 500, you really do kind of buy an opportunity to buy the stock market at all at once. Okay. You're buying 500 companies, right? It's going to render you a 2% dividend. And at 19, I don't know if I talk to folks that are in their 50s, 60s who don't understand the power of that 2% yield. Okay. The S&P 500 is going to yield you 2%. Set that up to pay itself. At 19 years old, imagine that S&P 500. And if you don't know the S&P 500 ETF or index fund, you can choose either one. I prefer ETFs as long as you have the discipline to invest in it and not sell it.
Yeah.
Because
Got you.
we're down 31.5 right now. If you invest in the S&P 500 right now, and with $1,000 position, you're not going to be able to buy everything under the sun. Okay. That's where I do kind of agree with you as far as your buying power being somewhat limited. But here's how you deal with that. If you've got $1,000 starting capital, you can buy the S&P right now for about $225 a share. That gives you about enough for 3 shares. Pick up 3 shares, put the rest to cash, and start to set yourself up, if you can, on a dividend reinvestment program. Okay. So that is going to pay shares back into the ETF. And then you can do a dollar cost average program where you start with 25 bucks. I don't know if you've ever heard my story of when I started. I'm not telling you something that I didn't do myself. 25 bucks is what I started with. Okay. I sold my first Mustang convertible that I bought with a bunch of fishing money for 3,000 bucks, split the money, $1,500 in each of those accounts. Okay. Those were just over 100,000 before this downturn. I'm flirting with about 80 in each account right now. That took about 10 years. All right. So if that motivates you to become an investor, it should.
Yes, sir. For a fact. Yeah.
What I would tell you to do is validate everything I'm talking about on your own. Okay. Get a hold of those calculators that I share in the description of every one of my videos. I don't think there's a whole lot of people that take as much advantage of those tools as I wish they would. But if you hear me, you're 19. It seems like you got a good head on your shoulders, man. You're going to college, going to make a career for yourself, man. That is legit. And if you can't tell, this is the very essence of what I enjoy the most on this channel, is to be able to talk to young people who have the chance to set themselves up in the way that gives you the best chance, at least of financial success, right? That's the key. I can't help you on everything else. I can't help
I understand.
You know, the finding a relationship and being spiritually strong, man, that's up to you. But the financial piece, you bet. That's in my wheelhouse. And I think to start, what that's going to do, man, is it's going to give you the diversity, right? It means you're invested in 508 different companies across the S&P. If something gets kicked out of the S&P, like Macy's, you've heard of Macy's?
Yeah.
A couple other have just now got kicked out of the S&P 500. So you always have exposure to those top rate companies. As you're busy doing other things, that's a good thing. Don't overlook that. Okay. So over the course of your life, this is a flagship account that you could buy and own the rest of your life. Okay. You're never going to have to sell this ever.
Right.
All you're going to have to do is fund it. So it takes very, very little effort as far as researching single stock and doing what's necessary on that side of the house. With that said, you get 5 or 10 years under your belt and you've got a nice $25,000 buffer, maybe 50. I don't know. Barring market performance, let's say you're sitting on 50 or more. Now you've got the opportunity to maybe branch out in the portfolio a little bit and add a little bit of that quality, Johnson & Johnson, Apple, Microsoft, stuff like that. That's why I do that in this order, man. We set you up for success and not set you up to not have diversity, right? Not have that diversification at a young age. Why? You've got the ace up your sleeve. You don't have sleeves on right now. Ace up your sleeve, man. The ace up your sleeve, my brother, is time. It's time. Take advantage of it. All right?
Got you. Yes,
cool.
sir.
Cool, man.
Yes, sir. Yes, sir. Appreciate it.
No.
One more question, and then I'll be out you here, and I'll be enjoying life.
He's chilling, man. In the way, I'm going to bring Sean on next. If he
go ahead.
To stay. Nah. Hit me up with another question, William.
Okay.
On in a sec. He's just chilling on the couch.
Okay, cool. Okay. Just like my last question, and then I'll just enjoy the live stream.
But,
okay. So in regards to like mainly owning like ETFs and stuff like that, I have a problem with I've heard about like VOO, which is the one that I was kind of like looking towards because I've been like watching your channel. I've been like talking to people in the comments and stuff like that.
Yep.
That's cool. I've heard of like I think it's VTIX. I've heard of that before, and like some other stuff or whatever, which is cool. But in regards to like how volatile like the market is and like where we are right now, do you think that possibly me kind of making myself one-dimensional when it comes to ETFs, I might miss out on an opportunity of it being like, you know, a possible good buy-in point for single stocks? Or do you think that I should just keep course and just hold like an ETF?
I think that's the opposite, actually. I think by entering into an S&P 500 index or ETF, I think what you're doing is insulating yourself to that downturn. You know, You're not subjecting yourself to that single sector risk, and specifically single stock. Single stock is not for the faint of heart. Okay. Buying the entire index, man. I mean, the S&P 500 has historically returned 8 to 10%. And what I would wish upon you, William, is this. This is what I would wish for you, is that you could reach an average rate of return of 8 to 10% for the remainder of your life, right?
That'd be great. Yeah, that'd be great.
Validate it for yourself. Take a look at the compounding calculator, and you'll understand that by putting that asset as low of an expense as it is, 0.03 is the expense. The real nature of my program on the Independent Investor Channel is not owning the S&P 500. That's only part of it. And I do contend that a lot of people try to overthink what they own as being the be all and end all, whereas I contend that the program, the nature by which you own these good quality assets, is the key. And the key that I'm going to give you now at 19 years old is to make sure that your Roth IRA is self-directed.
Yes, sir. It is. I have it with Charles Schwab. Actually, I've actually joined your Facebook group recently.
You the man. You got it. Don't overlook that. It's something that you'll evolve with the rest of your life, man. It'll be the greatest gift that I can give you, and I just gave it to you free of charge. I wish I had this information at 19. It's powerful. So don't look at the asset itself as being one-dimensional. Don't look at it that way. Your exposure to the market in the lowest expense possible with the highest potential of meeting, not exceeding, not overblowing the market. You don't have to buy the Teslas of the world, okay? You don't need to do that. You just need to make a respectable rate of return over the course of your life. Now, the market is going to go up and down, but over the course of your life, that S&P 500 has been the single greatest wealth creator for investors who don't want to spend the time researching single stock and taking on the volatile risk in doing so. All right?
Yes, sir. I appreciate it so much, Ryan.
You the man. Thanks for coming on, man. It meant a lot to me, man. I'm going to pop 2 guests on at the same time here, man. Going to finish out this live stream, William. Thank you. I'm going to give these guys a shot, but make sure you come back and check in with me on the Friday live stream, okay?
Yes, sir. Most definitely.
Let me know how you doing. Much. Thanks, buddy.
Yes,
take easy.
All right.
Yep. Hey, Sean, I'm going to pop you on now, and I've got Mr. D as well. I'm going to pop both you guys on at the same time, if you don't mind. How are you guys doing?
Good. How you doing?
All right.
This looks like my live meeting that I've been doing now, working from home every day. How are you guys, man? Talk to me. What's going on?
Go ahead, Danny. Well, me and him are actually friends, so yeah, I got him on here tonight. You know, obviously, I've been following you for quite a while. I'm in the military, so you know, I guess somehow one day, you know, maybe it was fate. You know, YouTube algorithm threw one of your TSP videos up on my thing. You know what I mean?
Yeah, I don't think it gives me a lot of love, Sean.
I know. I agree. It should give you a lot more love. But
I'd rather talk to good people. To be honest.
Yeah, that's what got me on here, and then obviously I got him on here because we're just both obviously interested in this topic. You know?
Yeah. Well, talk to me. I mean, you guys do a TSP. Are you military as well?
I got out in 15. My wife's still in, so I manage her TSP currently.
Thank you all service, man. This is rocking. Appreciate you guys.
Yeah, and then obviously I'm in the Marine Corps, so I'm active duty Marine Corps, and so yeah, it means a lot to me to be able to follow you and the perspective that you bring. Obviously, you don't touch on it a lot because obviously, you know.
I wish I could do it more. Actually,
I know it's just not a lot of people are obviously, you know.
Well, you know, and it's kind of sensitive. Military are fickle. It's weird, man. I went to CPOA Academy last fall in California. Everybody found out what I do, and we did financial planning at the bar over some brown liquor, you know, and just talk about it because people just don't know. You know, I talked to one buddy of mine who had spent his whole career. He was a chief at the time. We were going through academy at the same time, and he had invested his whole career, man, and defaulted to the G fund. And like, he's not the only one. There's just so many people. It's about 1 out of every 2 people that I talk to who are like, yeah, Ryan, I just didn't know, man. I started it. I thought I was doing the right thing, and freaking, you know, look at that, man. Now it's cost me hundreds of thousands of dollars in potential appreciation. It's sad. So Yeah, if I can intervene in any way, man, this is easy for me. YouTube, hell, 3 years ago, man, you would have never ever told me that I would have been running a channel like this, But my brother has always told me, is like, it kind of came to you. You need to use this platform to get a hold of people, and it's cool, Sean, for you guys to come on and validate that for me. It freaking means a lot to me. It means more than anything. It means more than anything.
Yeah, it means a lot to me. I mean, I didn't realize how important something like this would mean to me. And unfortunately, it took me until I was, 31 or 32, somewhere along that lines. And it sucks because I heard that guy that just came on, he was 19. And
I wish I was 19 when I started.
Crazy.
It's like, you know what I mean? Like if even 10% of what you said sinks in, he's on a path to just like,
he'll be fine.
Yeah,
I took care of him.
I was telling Sean, I've been investing since 2011. So I've been waiting for this dip. I've been waiting for the bubble to burst. And I feel like the coronavirus finally set it over the edge. And I'm just happy I had a big cash reserve. So now,
awesome.
One mistake I did make is when the coronavirus first started early last month, I pulled the trigger. I bought big.
Yeah, me too, man.
You bought what?
I bought bigger positions instead of buying
scale in.
Yeah, I buy 1,000 at a time or 2,000 at a time when I should have bought, a couple $100 worth at a time. I pulled the trigger on Delta, pulled the trigger on Visa. I bought some Disney. But I bought the cruise lines. I didn't buy a lot of the cruise lines. I bought the dividend payers like Royal Caribbean and Carnival, just, because I'm long term. It's just for my Roth IRA.
I think if you truly mean what you just said, I think you'll be fine with those names. I spoke about these at the top of the live stream, how I took these into trades. I capped about a $5,000 bill on those trades, airlines and the cruise lines as well, but not investments, man. And Boeing, same way. I've got 10 shares in the Roth IRA, but I bought a 100-share block when it went sub 100, made a small fortune with
it. I bought it at, I think 93 or 87. I bought it when it hit 87 in early March. I think Barry bought it.
How the hell did you do that? Did you have a limit order in?
Yeah, I put a limit order in. But Sean was like, it's not going to 87. I said, well, hopefully it does.
That's amazing, man.
So, if below 100, you're stealing it.
I mean, one thing that, Sean has taught me and you've taught me, and, dividend X dividend investor, his channel also.
Yeah,
it's just buying these really quality dividend paying companies that have a good balance sheet, like for example,
100%.
Or like we said earlier, Waste Management. That's a great company. I don't understand why that company's down. Trash is going to be getting picked up forever. That's not going to stop.
Nothing is subject. Nothing is immune to this. No pun intended. But man, the grocers are doing good. Kroger, Walmart, those companies are doing good. Target got whacked. I mean, there's some grocers that aren't performing. Costco got whacked. I don't understand. There's just lights freaking out the window. And then some of the growth stuff and high tech. I've been amazed at how Microsoft has held up. And then Amazon, Google, Facebook, relatively speaking, have not really done that bad.
Yeah, I bought some Facebook at 135.
Good work. Yeah, good work. You'll be fine long term there for sure.
Yeah. But just for like the younger people watching, like, now is a great time. M1 Finance, that's something that, I'm not being paid by M1 or anything, but I have Vanguard, and I recently opened an M1 Finance account. And the way they do their drips, how they rebalance the pies,
yes,
that's something that is just so valuable for these young people. They make a good pie with solid companies. You can just look at the ones you have on the link on your YouTube page for, beginning portfolio, and just, putting, like you said, $25, $50, $100 a month, a week, whatever you can afford into your portfolio now when the market's on its way down and in this dip is just so valuable to just do that.
I couldn't agree with you more, man. I think that a lot of younger investors are probably going to have a hard time seeing through the smoke, I think, with what you just said. I hope I'm wrong. I freaking hope I'm wrong, man, because I foot stomp exactly what you just said. But it's usually times like this, man, that people will be like, and it's kind of cool that I heard you say that you've been kind of saving for a dip and really being opportunistic with your buying. You know how many people actually do that? Like a lot of people I meet, they talk about it. A lot of people talk to me about investing all the time. And they're like, Ryan, man, you got me fired up about investing. This is great, freaking A, right? And they leave the room and they never do anything. I'll ask them like, hey man, did you do anything? No. I will. I plan on it, man. You know?
Yeah. Well, I mean, even on the way up, I still buy quality companies, like in my Roth IRA, of course, good dividend payers. And I think that's, you always want a dollar cost average good companies, but I've always had a cash reserve just for this, it's like outside of my Roth, like in my, I had a CD just sitting there waiting for this to happen. And I finally did. And I pulled out the CD.
So
I'm pulling the trigger.
You guys have got to check out this dividend income calculator. God, I wish I could. Yeah, I'm going to give you the link. It's buyupside.com. This is from Gen X Dividend Investor as well, who I'm glad you mentioned, because Gen X, I think, is the #1 YouTube channel. No doubt about it. You want to bring some folks into a close community. Certainly you can share mine. I'm a little more down to earth. Gen X he's got artificial intelligence, right? And I mean that in the nicest of way. That dude's super sharp. I'd like to meet him someday. I don't even know if it's a him.
His spreadsheets are incredible.
But if you check out that link, man, that buyupside.com, and check out that dividend income calculator, you're going to get all the substantiation you need. I used it to actually bring my wife over, and I was like, take a look at this. All right. If we do this for 20, 30 years, Sean, you mentioned you were 30 something.
Yeah.
I didn't start really doing this program seriously until I was 34.
Yeah.
Okay. So in 10 years, we're flirting with the $100,000 portfolios. Up to a couple months ago, I'm down 20 in each of them. No big deal, right? But we're doing other things as well. And I'm a single income guy, right? My wife doesn't work.
Mm-hmm.
So if I can do it, I hear what it's like, okay, yeah, I wish I would have started earlier. I did. I started earlier, but I started like an idiot. I screwed up in every way I could.
Yeah.
I think if you start right, I think if you start at 32 and you run that through that exercise right there and take a look at that dividend comparison that I'm talking about between it's the effect of the compounding effect over the drip and the compounding effect if there is no drip. And you basically just take the cash contributions where you're going to be with X, and they'll allow you to set the scenario up.
Yeah, I think we watched it. We watched it today.
We looked at it today, actually. Yeah,
changed my life, dude. I'm a big fan of quality, dude, and I have no shortage of compliments for that guy. Give it where it's rendered. You guys know if I came on and spit venom about other YouTube channels, I have a laundry list of people I can't stand. And I've just done away with that stuff. I don't watch them anymore because it angers me. There's just not a lot of quality. There's just not a lot of. There might be quality and there might be enthusiasm, but my question is, what is the impact on people? That's
I introduced Danny here to Joe Carlson for the first time today. He had never heard of him before.
Freaking amazing.
Yeah, ever.
I do have a question for you though. For my Roth IRA, all my stocks in my Roth IRA are dividend payers, except I own Tesla because I got it cheap. I bought 10 shares at 187. I've just left it in there. I do have a question about, my wife. So my wife has her TSP, which is fully funded, doing really well. I actually, when the Iranian conflict started, I moved her CSI money over to the G just because I felt the tension, thought it might come down.
Fair enough.
Sure enough, the coronavirus brought it down. So I've been moving it back over to the CSNI as it's been going down.
Sure.
But my question for you is, I'm open. I got $12,000 I just put in her Roth IRA from last year and this year. That cash I put aside, I opened her a Roth IRA.
You bet.
I'm going to contribute and buy quality companies like, AT&T, Johnson & Johnson, AbbVie, those good companies. But as far as growth stocks in a Roth IRA, when it comes to like the Facebooks, the FANG stocks, the Teslas, the Shopifys, the Intuitive Surgical stocks, stuff like that.
Yep.
Is that a move to, should you buy some small positions in a Roth IRA, or should you just put them in a taxable brokerage account?
I don't. I'll just give you a page out of my playbook, man. I think there's probably different schools of thought on this. I've seen IRAs that are chucker blocked full of growth. I don't like to invest that way. You guys, if you've followed my channel long enough, you see how I do my growth stuff. I've got the 12 names in M1 Finance. Okay. It's a taxable account. Because here's the thing, anytime I buy an Amazon and I go up 600, 1,200, whatever it is, I always want to just sell it and take profit. Mm-hmm. Here's the thing. The 12 names that I own in M1 Finance in the taxable account, I don't really want to own any of them in the Roth IRA, because the rule in the Roth IRA is really simple. You want as much quality in there with as little downside risk as you can possibly get. Okay. So to meet that criteria, you've got to buy quality that's going to pay you the dividends, and it's going to get you where you need to go. And I'm not saying Amazon's not going to be around in 30, 40 years. I'm telling you that it probably is. It's one of my favorite companies. I currently own 0.66 shares of Amazon. I took a $5,000 bill and just threw it in M1 Finance. I built the growth portfolio the way that I wanted it. I wanted Uber. I wanted Netflix. I wanted NVIDIA. I wanted growth, Facebook, Google, Amazon. If you guys know, right, I'm pretty open with that. I like Booking Holdings. That's one of my favorites that doesn't get talked about. Sure, man. And PayPal. That's how I typically like to do it. And you got to be kind of careful with growth because it's like kissing a snake. It really is. It can be the greatest thing while it's good, but it can bite you. Mm-hmm. And that's the thing is I'm not saying that you can't invest in a quality company or a perceived company and end up on a Kraft Heinz food. That stuff's going to happen. A General Electric, for example, that could happen. But I want to give myself the very best chance of putting the best quality in there. Don't get crazy. $12,000. I mean, you guys know, if you followed me long enough, you guys know I even like the passive base in the Roth IRA to make sure that half of my holdings are S&P 500, small cap ETF, that type of thing. And then with the remaining 50%, I can buy that good quality.
Now for her, real quick, I will interrupt you. So for her, I own, she's got 30,000. She's got, I think 10,000 in the C. Yep. Some money in the S and some money in the I. And I always leave a little bit in the G, like, about 8 to 10,000 there also.
I like
should
it.
I buy the VU in the Roth or should I just buy quality companies?
See, that's where you have an advantage, man. That's where you got an advantage, mate. Right? Because you guys collectively, right? You're married. So you're already covering that exposure. Okay. So this is where it starts to get a little bit tailored to your specific opportunity. And I can kind of tell that your tolerance is relatively high. You like investing, you're savvy, you got it down. So with that said, you have the passive investments on the TSP. I would recommend you take a little bit more passive approach to that and invest in that TSP come hell or high water in the S&P 500, which is the C fund. Yeah. Use your Roth IRAs strategically, which if I'm going to kind of read between the lines, it seems like you want that good quality single stock stuff that's going to give you the best chance. Hell, if you want to go ahead and invest in Amazon and yours and Google and hers, well, who am I, right? It's just an idea. Okay. The way I seek out my exposure at 42, maybe a touch different. If those are companies you really want, I agree with you in all three: Facebook, Google, and Amazon. They're phenomenal. Okay. You're going to win long term. Nice to have some of that growth and appreciation. But when you do that dividend calculator, you're going to find that, maybe taking on the extra risk in a Roth, where the rule is you shouldn't lose money in your Roth. In positions that you're not second guessing someday and be like, God, what happened to Booking Holdings? Something came along technologically that put them out of business, or, they're rooted in, but you get my example, right? Mm-hmm. Something happens to Uber where you've got a ton of lawsuits on the books, right? Now they go to nothing. Well, my exposure to it reflects my risk to those companies and my desire to have some risk in there, but not so much that I want to put big positions on those. That's just how I do it. But with you, I hope the layering approach kind of comes through, because you are at an advantage, man. You are in an advantage when you hold the TSP. You've already got that passive exposure to S&P. You said that your max funding as 19.5 a year.
Yeah, 19.5 is what they allow you to put in there.
My hat's off to you.
You said you were max funding the Roth IRA. That's what you meant. Yeah.
Oh no, I put 20% of her income into the TSP.
That's pretty awesome.
Money into her Roth. She didn't have a Roth before. I just opened her a Roth.
Fair enough.
I funded for $6,000 for last year and $6,000 for this year.
It's pretty awesome. And I mean, you can't argue with the timing. I hate to use that word in the context of investing. However,
it worked out.
If you were excited in February about investing, why the hell aren't you excited here in April to step into the market down 31.5? But, I'm not going to tell you it's not going to go to 40 and it's not going to go to 50. With everything that I'm seeing as of today, I don't know. I freaking don't know. And that's the part of it that's kind of like, it's got me kind of grimacing a little bit. And it's like, God dang, man, if you want my honest opinion, I don't think it's going to, okay? Because there's too much unique dynamic about this drawdown, okay? There's too much that was going good in the economy. The economy is still good, but the further on this goes, the further the lingering effect on the real economy is going to be, okay? And the longer it's going to take, I think, relatively speaking, to actually improve over time. I think a glimmer of some positive trending data that holds true for 3-4 days in a row is going to be an extremely big stimulus to this market. And we are void of that right now. So I actually don't think we're going to retest bottom. I will maybe wrong. I've been wrong before in the market, but hey, good on me for coming on and drawing a hypothesis about where I think the market's going to go. There's a lot of people who would disagree with me in this thread. They would say, "Now, Ryan, we're going to retest the bottom." I hesitate to say that. It's somewhat cliche because I don't want to sit here and say we're going to retest bottom because that's what we've done in previous bear markets and recessions. I don't want to do that. This is not a normal drawdown here. This could change on a dime if we get a handle on this bitch, overnight. And if that happens, it's going to change things on a dime. And we're going to remember that 2 months ago, we were in the most historic bull market backed up by extremely amazing earnings and a country that was firing on all cylinders. So we'll see, man. Y'all's guess is as good as mine.
So you'd recommend dollar cost averaging, now?
100%.
Yeah.
Okay.
Okay.
I mean, come on. Today was about as grimacing as I could take to be like, I've taken some pretty good moves. I hit the bottom perfectly on my trades. Okay. Made some pretty good trading profit, but then did some investing because I actually felt like the entry to those stocks down 25% at the time where I entered into Bank of America, the portfolio that I gave tonight on this live stream to supplement the existing holdings. I thought, relatively speaking, it was a good entry. And, that was 6-7% ago on the S&P 500. So, yeah, I think relatively speaking, I mean, good grief. Don't be so crazy that you want that perfect entry.
Yeah, of course not. Yeah.
But the way to buffer that is to kind of calculatively scale into the market and it'll pay off long term. Good grief. Be a different conversation in 2021, man. That I can guarantee you.
Looking forward to it. Especially for some of that red to turn green again. The one that, the paper losses.
It's just, man, I mean, if you've got the fortitude to invest now, you'll validate why it is you did that. And you'll be so glad you did. There's a ton of people out there that are talking themselves off of this market right now. Mark my word. Like they would have been the ones that are the loudest. Yeah, I'm going to invest when the market goes down 30%, blah, 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 blah.
Yeah, they didn't save any money, though, because they didn't know what they were getting themselves into. Yeah.
Well, and that's another thing, too. Like, I hate to say I told you so, but I hold cash in the side. I lose a 2.2 bits per year in inflation, right? Okay, so I take a lot of crap for that. I made up that 2.2% inflation in about 38 seconds when I was able to have that pay dirt aside and put it to work. And that means more to me than just putting $100,000 into a 2.2 yielder to tie up my money. I mean, it's liquid, yes, but a lot of people will say, yeah, well, just put it there until you can put it to work. Now that I like, okay, that I like. Love the high yielding idea, but not to the extent of just exclusively putting, let's say, $100,000 to render $2,200. I don't get it. Partially I do, but if the market conditions become conducive to buying, I'm pulling to buy stock and equity.
How do you feel about selling your Vanguard bonds currently that you have in your portfolio? Let's say you have 20% bonds right now.
Yeah.
Do you feel it's a good move to go ahead and
I sold it all better than Joe did. Yeah.
Yeah, because me and Sean today, I put orders in to sell I got, short-term corporate bonds, long-term corporate bonds, like different.
Long-term? You've been killing it with long-term.
I mean, I was up a little bit, but not too much.
Okay.
But I'm selling them to buy equities, to good quality.
I just think, man, I don't get me wrong, man. Having a mix of fixed income and bonds, but again, use that TSP. You said yourself, you keep one stack of high society in the G fund anyway, right? Mm-hmm. So there's your bond exposure, dude. That G fund is actually pretty legit. It's phenomenal. It's like 3% of free money.
Yeah.
I think the difference between maybe the way that Danny invests and maybe how you invest is that he actually had his bonds in his Roth. I was like, you got to get that out of there. You got to get that out of there right away. I mean, if you're pretty much even on him right now, like he may have been down 18 cents in one or 18 cents in another. You got to get out of that right now. And if you want to invest in bonds, whatever, put it in your taxable. But you have to invest right now all that money otherwise you're going to lose all that opportunity in your Roth.
That's kind of the way I looked at it too. And that was my one criticism. And if Joe Carlson was here, I would speak to him just like I'm talking to you guys. I have the utmost respect for Joe, but I always thought he was a little more on the conservative side than he needed to be. And his program makes sense for him, no doubt about it. I'm an avid follower. I don't watch all of his videos. They're long as heck, just like my live streams. So, I always thought his exposure to bonds were a little bit crazy because he strikes me as a younger fella with a good income as well. So I think he justifies going ultra conservative because he has the ability to overfund dips in the market. That's kind of reading between the lines on what he's trying to do. But I was surprised. Yeah, he liquidated all the bonds. And I didn't watch the video yet, but I did it before this dip. I had made a pretty good amount. Last year, I made a small fortune with bonds during that run up. It was crazy. They were trading like equities. And I was like, something's wrong here. This is really odd. And just decided to liquidate. I don't need to be holding bonds at 42. You guys don't need to be holding it at your age either. But again, with your exposure to the G fund, use that and say, hey, if this is going to be my slush fund, nice. I can make my 3% here. Hopefully are you in the Roth TSP?
Yeah, Roth.
Legit.
Yeah. I mean, they match now through a traditional, so you got both a traditional and a Roth.
You do have a small
blended.
traditional.
Yep.
So I'm 32. She's 26, so she's got time on her side.
Plus, she's already been in it for what?
6 years, 7 years.
Yeah, 8 years.
Remember me someday, man.
I will.
I tried to turn this guy on to you about 2 weeks ago. I was like, just listen. I fortunately for me, I was, TAD to Camp Lejeune. I had nothing to do. I was all by myself. And that's when I just had, like I said, the YouTube algorithm just happened to throw one of these at me,
Glad it did, man. Glad it did.
So am I. I got extremely lucky because.
Hey, so is your name Kerry? Is that your first name?
No, Danny. His name's Danny.
Danny?
Mm-hmm. Daniel, yeah.
Awesome. Yeah, I don't know, man. So if I can tell you, you're 31 years old?
32.
32? Where did you get all this investing knowledge, man? Just reading books, studying. This topic's come up a bit tonight on the stream, but I'm impressed.
My dad was a huge investor growing up, and then in 2007, I took a business class. I'll never forget. This is a true story. So I took a business class, so we made fake portfolios to kind of learn how to invest. I had $3,000, and this is when Sirius. This is in 2008 when Sirius satellite radio dipped down to 7 cents a share. Mm-hmm. I asked my dad. I said, "Hey, Dad, I got $3,000. What do you think about me buying Sirius at 7 cents?" He goes, "Don't waste your effing money on penny stocks."
Yeah.
So I bought Citigroup, Pfizer, and I forgot something else. I don't remember what it was. It's in my Scott Trade account.
Yeah.
And then now Sirius is what, $6 or something? I'd be a millionaire. But, his advice was right, because, from that advice I got at a young age, I started doing dumb stuff, in my early 20s, like buying penny stocks and not making money. But then I finally started buying the Apples of the world, the Microsoft, the Home Depots, the high-paying dividend stocks that really grow over time, and you really see that compound interest and dollar cost averaging pays dividends, and time is the most valuable thing you have. And if you have age on your side, just put a little bit in every month in good companies, and it grows ridiculous. Like I'm still up, even though there's a dip. All my quality companies, I'm still in the green. There are some that I'm in the red with, but those are ones I've bought recently. Like I bought FedEx on the dip this year when it went down on bad news. I bought some 3M But in the long run, I'm still in the positive, and I'm really, really looking forward to what's going to happen in the next 5 years, especially with what's going on now.
Well, you're going to set yourself up. I use this all the time. The decisions that you make today are going to set yourself up to make these decisions 5 years from now. Okay, so you'll be there. and you'll be reflecting on this time and be like, God, you remember that thing, man, when it was rolling through? It was terrible, man. You know, that was my time to step in, and I'm sure glad I did it. And you'll be making decisions then that can be predicated upon or built upon the decisions that you've made now. So these little pieces of I hate to use the word advice, but they're just awareness pieces to say, hey, Ryan, what do you think about this? What would you do? Hopefully you appreciate my thoughts on that stuff.
Yeah, very much.
It's aimed at giving yourself a freaking fighting chance down the line to look at your decisions and say, yeah, that was legit. I didn't spend my time screwing around. You know, there wasn't penny stock, man. My friend Sean told me to sell out of my bonds. I'm glad I did that. Free up some capital. I don't need that sleepy money in my Roth IRA. I want to put that money to work now. I'm glad I did. And again, I'm not going to sit here and promise you that the market's not going to go down to 40. I don't think it will. That's just my opinion. But 5 years from now, is it really going to matter?
No, I don't think so.
Not at all. That's what I tried to tell you, man. Like, we're retirement accounts. It's not 5 years from now accounts.
That's another thing too, man. I'm not sure if you guys pick up, Sean. You've been following me a while about my importance on cash too. You know, if you guys are making some good income, making sure that you're supporting and building wealth, all right, in a lot of different pillars. I just look at the TSP as just being a pillar. I look at both of y'all's Roth IRAs as being pillars. I look at your cash buffer as being a pillar. With y'all's income, and I don't know what your lifestyle draws, but I'm still sitting on 60 right now, and I'm a single income guy that makes, you know, 60, 70,000 a year.
I mean, it gives me hope at least. You know, I mean, it gives me hope.
It's just an idea. I just think, you know, we're in a consumer-driven society, right? So this whole idea of stimulating the economy by putting a bunch of dumb money, $300-400 in a family. I'm like, why aren't people investing that? You know, that they're expecting that people are going to go to Walmart and buy themselves a new TV. I don't know. I hate to say that, but God dang it, it's the freaking truth. Like, people will go out and they'll blow it. You know, they may save it for a little bit. Hopefully they pay off some debt. For crying out loud, this country is laden with debt. You know, I'm not, but I just choose to not to do that. You know.
Mm-hmm. Yeah.
How long do you think it'll be until some of these dividend cuts will be restored? It all depends on how long the virus is going on, huh?
Depends on the company, man. You know, I kind of cringed a little bit. The airlines are tough right now. They're tough. And 2 years to recover from 9/11, the airlines, you know, our people
was back then, because we're a little bit too young to know. So you're saying it was 2 years before they started paying dividends and stuff like that?
2 years before people really started to get on airlines, and the airlines have consolidated quite a bit. I know American and Delta and United are kind of conglomerates now. You guys remember there was every airline under the sun. Now those are kind of the big three right now. They've kind of merged together. Mm-hmm. If I were going to take a wild guess at it, I would say at least 6 months, at least. Yeah. And I'm being very, very, very fair, because you're braver than I am. If you were going to enter into an airline long-term, Delta is the play for sure here at mid-20. I mean, good grief. It was trading well above 60, right?
Yeah, I bought Delta and Love, Southwest.
Sure. So Southwest, I believe, is like the best in breed. That's like my favorite. As far as a custom, like I compare Spirit and Southwest, and those are like the two opposite ends of the spectrum. Southwest, I just like how they run their business. I think it's phenomenal. But as far as the large business class, yeah, it's crazy, man. They're freaking crazy. You'd be surprised to catch an on time flight with Spirit. It's just insane. But
sure. They shut the bathrooms down sometimes.
Oh, sure. Yeah, absolutely. Why would you need to do that? Here's your crackers. Eat it. It'll absorb some stuff for you, man. You know, but yeah, you're just going to have to have some patience, but I don't mind, you know, if you're younger, take a little shot. I'm 42. My shot right now is General Electric, no doubt about it. So I actually opted for GE instead.
I bought it at like 24 a long time ago. Yeah, I got 25 shares. So I'm just holding it, just letting it sit there, let it come back someday.
Yeah, it'll come back. I think it's going to come back in a big way, actually. Yeah, a whole lot, but we'll see. Anyway, gents, I've got about a little over 2 hours, man. I would invite you guys back on the live stream. I'd love to keep tabs with you guys as well. and just kind of know how you're doing, come into the live stream a little bit closer toward the top of the stream as well. But I do want to have a couple minutes here and just kind of review the thread here. I'll go a little bit longer tonight as well, because it's great having you guys on.
Appreciate your time, really do. Thank you for all the help you've provided with us. I'm gonna keep watching your channel from here on out. So
do it, man. Do it. And hit me up with any recommendations or any questions that you might have later on. You might have some more questions come up. Just hit me up.
For sure, we'll do.
Anything for military. Absolutely.
Awesome. All right. Have a good night, man.
Thanks, gents. Take it easy. Very cool. We're a little over 2 hours, guys. Really appreciate the guests coming onto the stream. That is what it's all about. I think when I get the opportunity for cross dialogue with investors out there who I'm trying to reach, but obviously YouTube is kind of a one-way avenue for the most part. So when I push this message out, I push it out with the aggressive intent of reaching people. But for me, I'm very tangible person. And sometimes I really can't quantify how much impact we're making until what happened tonight happened. And I can't thank the guests enough, man. That was a lot of fun tonight. Very unexpected. I like it that way. I like the dynamic of having folks come on and really, really look to get a few questions answered about fine-tuning their programs. And the last two gents that came on, man, my shipmates, it was awesome to talk to those folks. And I can't believe I had somebody that was 19 years old. What a great ambassador for the younger generation that really should spend a few moments focusing on this stuff. I do want to take a couple seconds here and just acknowledge, I understand. I mean, I've got a conversation thread here that is way, way too long for me to get to tonight. I do apologize for that. We will be offering the product again next Friday. So if you guys do have any inkling to pop on and take advantage of the live stream, please do so. I do want to thank the guests specifically for doing just that tonight. But to the channel creators that have made their way on tonight, what a freaking awesome live stream. I'll remember this one for a while, and really has a lot to do with the guests bringing out the best in me. That's kind of what I envisioned. Getting on here and rapping about my perspective in the market really only goes so far as my singular perspective can go. But it's amazing the cross dialogue that can be generated from new investors that come on and are really trying to generate some wealth for themselves. That, quite frankly, is where the focus and emphasis on the message should and always will be, if I have anything to say about it, guys. So with that, I will tune off or sign off for this evening. We will be back again next Friday on the live stream. I can't thank you guys enough for your support. I typically come on a little touch early on Fridays. So if you're welcome, you want to test equipment, come on. I throw the link in there so you guys can jump on and do a little cross dialogue, check the equipment. And then if you do want to opt into the live stream, you definitely can. But with that, guys, stay strong on your investing for sure. Hopefully you're all staying safe out there. From the bottom of my heart, I do want to finally thank all of the frontline healthcare professionals that are working right now. Y'all are engaging in the trenches right now. And I can't tell you how much, at least from my, again, singular perspective, how much I appreciate that effort, man. It's incredible and it's inspiring. And that's really where it's at. So good luck, guys. Have a great rest of the weekend, and we'll catch you next Friday. Take it easy.